All right. Looks like we're good to go. Okay, welcome everyone. Thank you all for coming to a weekly watch list. Usually I do this, of course, on the weekend, but you guys already know, I was pretty much busy this weekend, so I wasn't able to get this done. So we're gonna be able to do this now. First, I'm gonna go over the ticker that I'm looking at for this week, and then I'll be able to take chart requests and then answer your questions or any questions that you guys have. All right, let's get started. So first, let's take a look at the charts. Let's take a look at ES. Well, actually, before I take a look at ES, let's actually go over the economic calendar for this week, usually. So we had PMI come out today, which is actually bad. I don't know if you guys know what the number was. It was actually bad. It's pretty well. One of the reasons why we got a down move for the market today, as well as, you know, the Japanese bond market as well. And we also have J-Powell that's going to be speaking in about an hour and a half. So just keep that in mind. The futures market could move depending on what J-Powell says. So yeah, just keep that in mind. We also have initial jobless claims, ADP and PCE on Friday. PCE coming out on Friday, initial jobless claims on Thursday, and ADP that's going to be released on Wednesday. Also keep that in mind as well. You guys are probably aware about the Fed rate decision. It's going to be happening next week on the 10th. Are we going to be getting another interest rate cut or not? So let's see what J-Powell says, or the rest of the Federal Reserve, what they agree upon. And the reason why I want to bring this up, actually, let me go into the charts real quick. So the reason why I'm bringing the December 10th interest rate decision up is because back in last year, December 18th, that's when we had the FOMC interest rate decision, or that's when we had our FOMC meeting last year, and we pretty much J-Powell pretty much tanked the market. And that marked the high of the year, not necessarily that day, like we made a high, you know, a couple days before we made a new all-time high. But after the 18th, the market did not make a new high. So just keep that in mind. The 10th is going to be very important, whether or not the market is going to react, you know, in favor, or are we going to get that interest rate cut or not? And let's see how the market reacts to that. I would like to think that if we do get that interest rate cut, that we're probably going to be seeing a new all-time high. But before that, we got some legway. All right. So now going into the charts, this is spot on the daily time frame. Phenomenal move last week by the bulls, right? Ever since that displacement candle to the downside on Thursday, we've just had constant green days, nonstop green days. 1, 2, 3, 4, 5. Even today makes the 6th green day. Now, not only have we had that displacement candle, or not only did we get a move to the upside, we got a displacement move that countered another displacement move. So if you keep this outside bar on Thursday, right, this was a displacement candle that created new lows or made new lows. But then this outside bar, we got a 322 reversal, not only took out the high of that bar, but we also got candle closes above it. So you had displacement countered by displacement. And right now, if you take this range, so if I take this low from Friday to the high of last Friday, and I do a green box, right? This is what we got right now, okay? This is what we have right now. You have this movement that countered this. So I would like to think, especially because the macro timeframes are still bullish, I would like to think that every low is a potential higher low to potentially go higher. Meaning that if we even get a down move, let's say we get a down move that fills this imbalance, or we go even further down, it could set up a potential higher low to take it back to the upside. Now, when will my thesis change? My thesis objectively changes when we get below Friday, not last Friday, but the previous Friday, when we get below that candle's low. Because then you would be doing a market structure shift to the downside, or I should say, I mean, if this is gonna be the high, then this would actually be a break of structure to the downside, because this high doesn't take out this one, so it actually really does depend. But if we break 2 down on the week, right, or we get below that 650.85, then objectively we know that structure is changing, and it's changing and shifting towards the bear's favor. So until then, they got a lot of room to make up for, or to try to get to that area, which is why I would like to think that every low, especially since we have this displacement candle, higher time frames is bullish right now, every low can be a potential higher low to continue the trend back up. Now, because we did have this green, right? You already know CCRP. I'm waiting for the CCRP potential. Give us that CCRP potential, trigger the CCRP. Let's potentially get this balance filled or imbalance filled. And maybe you want to give us a dip buy here at 670, maybe at 665, or maybe at 660, as long as you do not break below 650, which I will assume that every low is a potential dip to go higher. Now, when does that occur? Who knows, right? I'm not going to anticipate that, but I would like to anticipate a reversal if we do truly get a reversal back to the upside. Now, I talked about this pullback potential. We closed the shooter on a day, so let's see what happens with JPAL, right? If we get a 2-2 continuation to the downside, you would be targeting the 676.72 gap to 675.01. If you get a 2-2 reversal back to the upside, then of course you would be targeting this pre-market gap fill that you created today at 683.39, and then you're looking for two up on the week at 683.67. Now let's go to the higher time frame. If we look at the weekly chart has a potential CCRP, and you close relatively or really bullish on last week's chart. You just need CCRP to become actionable, right? So this would be a potential 2-2 continuation on the week. They have a week to potentially set off that trigger, or we can close inside if they really don't want to give us the move right now. Another time frame that opened up, we had the monthly chart. We close as a hammer on the month. Now, a lot of people on Twitter, which of course rightfully so, because objectively it is, they're talking about this potential hanging man pattern on the monthly time frame. Now, objectively, yeah, you're right. This could be a potential hanging man. But the thing is that you actually don't get confirmation of this hanging man pattern until you break two down on the month. So you can anticipate it all you want. Oh, this is a hanging man pattern. This is a hammer at the top of the range. And I even have a video talking about hammers at the top of the range aren't necessarily bullish, right? But the thing about hammers is that they're bullish when they're actionable. We know that they do the opposite. When actionable means they trigger. We know that they do the opposite when you trigger the opposite side. So if they truly want to set up this hanging man pattern, which also coincides with the CCRP on the month, you would have to trigger two down on the monthly time frame. And before you trigger two down on the monthly time frame, those if-then statements, how could you potentially get there? If they truly want to go down, how could you potentially get there? Well, the weekly chart would have to go two down on the week. You would have to get below 661.21. You would have to get below the previous month low, right? In order for you to get to the hanging man, you'd have to trigger two down on the week, which would by definition the target for that would be two down on the month. So it's not until we're triggering two down on the week where I'm going to be saying, hey y'all, something is happening now. Until then, no. We would want to assume that the macro thesis wants to remain true because they caused the displacement candle to the upside until they countered that displacement by you going below that candle. Similar fashion to with Thursday. What counters this aggressive move to the downside is price action actually getting above what started that move. Okay, now we're anticipating, and this is a perfect area where you can start putting, okay, where am I going to be placing my fibs? Where is that potential OTE bounce? Maybe price wants to come back into 0.5 in TTO. Do we want to go back to 0.618 in TTO? Do we want to go to the 0.786 in TTO? Who knows? But I'm going to assume that every pullback is going to be true. Every pullback is going to be a potential higher low or TTO until proven otherwise, until you trigger two down on the week. All right, similar to QQQ. QQQ, essentially the same thing last week. You got above that displacement candle on Thursday. You closed an outside day to the upside. Outside days, we're either going to trigger a 3-2 up tomorrow or we can go inside. Or 3-2 down. We know the target for a 3-2 up, gap fill. 3-2 down, gap fill to the downside for Qs. DIA. DIA is the first of all, I want to preface this. All the indices last week, they all got the bullish move. So the SPY analysis, just think of it for all the indices, right? They all setting up for potential higher lows scenarios. It's just a matter of when. Now, DIA currently, at the current moment, you have a potential CCRP. One of the reasons why I hedged with the DIA put position is because you're the first one to have a CCRP potential. Now, CCRP becomes CCRP once you trigger. You can anticipate, but if it doesn't trigger it, then the CCRP doesn't trigger. But if you were to trigger the CCRP to the downside, then you have a potential gap fill play to 671.93 to 671.18. Now, I like, just like with the other indices, I like it for a continuation back to the upside, but with DIA at this 2-week chart, they could stay inside 2-week, try to, play around a little bit, because it's the first week of December. You guys have to keep that in mind. We still need uncoupling to occur. So if they want to be tricky, they can make this 2-week candle stay inside. We don't do anything, and you're setting up for a 3-1-2 up or a 3-1-2 down for the next 2-week chart that opens up next week. So keep that in mind. So the 2-week chart, I can't really do anything right now. I got a 3-1 setup. You can either do a 3-2 or a 3-2 up or a 3-2 down, but you're in the middle of the range. So the likelihood of you going there at this current moment is not that likely. So what participant can I trade off of? I can trade off the daily participant with a potential CCRP to the downside or a gap fill play on each side. I just like the CCRP back down to set up a potential higher low. Okay. IWM also closed as a shooter on the daily chart, did not close red, but it's also similar fashion, possibly setting up for a 1-2-2 continuation to the downside. Just a pullback, and we know that the pullback becomes a true reversal once you actually hit those time frame targets, like 2 down on the week. All right. VIX on the daily chart closed as a 3-1 on the day, a 1-3-1 on the day. We know that a 3-1 setup sets up for a potential 3-1-2. A 3-1-2 could lead into a 3-1-2 see you later. We don't know which side VIX wants to trigger, but we know we got a 3-1 right now. And what's so significant about a 3-1-2 see you later? Well, if you had played VIX last time it gave you a 3-1, oh man, you would have been long the market. Oh, see, that's why I love this stuff. Look, VIX could have been the reason. Remember when the market just went straight up, right? Last week, VIX could have been the reason why you said, I'm gonna go long the market. Why? Because VIX got a potential 3-1-2 see you later on the daily time frame back to the downside. Oh, okay, say less. Boom, 3-1-2 see you later back to the downside. So let's see if VIX wants to set. What I love about the charts is that we look at it now and then we can come back 5 days later and be like, did it do it? And if it did it, it did it. You know what I'm saying? So we got a potential 3-1-2 setting up. It's just a matter of what side, 3-1-2 to the upside or 3-1-2 to the downside. I have no bias right now. You have imbalances to the downside. You have fair value gaps to the upside. It can go either or. We know that it can go either or. Play the breakout. All right. Last but not least, Bitcoin. I haven't done enough research yet to know that what caused this down move or why this down move occurred. I'll be honest, I thought 80 was gonna be the dip for a little bit, like, at least like a couple of 2-3 weeks. The fact that we're at 84 again, I was like, wow, that was really fast. You are not giving up whatsoever. So hey, Bitcoin, especially we're coming into OTE, so we'll see what happens on the daily. But we know if you make a new low, 75K is coming up next. And Bitcoin this entire year so far, the entire year, for maybe even the last 2 years, it has been a leading indicator for the market, right? 100K, above 100K, risk on. Below 100K, risk off. Every single time Bitcoin dips, the market dips with it. So look towards Bitcoin as your risk on, risk off indicator. We can probably bet that if Bitcoin is below $80,000, the market is probably going to be lower than where it is today. And we'll see. But Bitcoin has been a leading indicator for, upside and then now for the downside. So I would continue to monitor that situation. All right, now a couple of sectors that I'm going to be looking at. XLY. Now, XLY was weekly. You guys probably saw there was a bunch of CCRPs on the weekly chart for a bunch of sectors and a bunch of tickers. So the way we trade a CCRP is how I'm going to be thinking about these stocks. So XLY is potential CCRP on the weekly time frame. Same analysis with the indices. I would like to think that every low is going to be a pullback until you break 2 down on the week, because this candle is very significant or is very important. This is a strong bullish candle. closing at the highs with the potential CCRP. We know that participants are in here until proven otherwise, and until proven otherwise means, well, in this case, it would have to mean outside week to the downside. So I'd like to think that every low is going to be a pullback to go higher for XLY. If you go to, wasn't there like a 1-3 somewhere? There we go. There it is. I had a feeling. There was a 1-3 on the month. Okay. Now this 1-3 on the month, yes, it can go both ways. It can be a 3. It could set up. It could be the indicator that's letting you know, no, we're bearish, right? We're a hammer at the top of the broadening formation. We're gonna go lower. But I like to think that this 1-3 gonna trigger 2 up. I would really like to think so. We'll see. We'll see. You know, consumer discretionary, December, Black Friday, people went crazy. Cyber Monday, people going crazy. Maybe. Let's see if we can get a 1-3-2 up on a month for the month of December. I would not want this to stay inside for you to be tricky. I know things might be predicated on the interest rate cut on December 10th, but I really like this monthly time frame. And a 2 up. If the weekly goes to target, nah, not yet. Nah, I thought it would go in the month. Not yet. Yeah, not yet. But let's see if XOY wants to. Let's see what XOY wants to do this month. Because that 1-3 on the monthly time frame, that's fire. That 1-3 on the monthly time frame is fire. Fire. So let's see what happens. After XLY, XLP. We know XLP, one of the strongest ones to close out last month. You close pretty much at the high of the month. It's one of those, if you trigger 2 up on the day, you trigger 2 up on the week, and you trigger 2 up on the month. So trigger machine gun type of play. Now, we've been talking about XLP development for like actually over a month now. Yeah, with this monthly sweep and how it could be setting up for a Q1 move. We triggered 2 up on the month today. I know it's the first day of the month. We shouldn't think anything of it yet, but let's see if this can go in force, because this could be setting up for a move going into next quarter. Why do you say that? Let me show you a blank screen real quick. If we go to XLP on the 3-month chart, okay, this is what it looks like on the quarterly time frame. You got that sweep. We talked about this SR flip already, right? All this supply here. And then now you want to be disrespectful and go do demand and 1, 2, 3, 9 months? 9 months? XLP, we will see you next year, 2026. 2026. Hopefully, we'll see. I know we can't, predict, but hey, that SR flip on a quarterly perspective is crazy. So I'd love to see XLP go crazy in the next year. If next year is I don't know why. Man, imagine if next year is a year of oil and consumer staples. That's gonna be like 2020. What was it? 2022, 2021, 2022, all over again. We'll see. Cause you know how like all these texts out, they all at these highs and stuff. We'll see. We will see. But XLP, I'm loving this. Loving this for continuation to the upside. Flag breakout and everything. I'm pretty sure you have there gotta be some time frame that even clean. They're giving you the Eli Lilly too. Oh, they giving you the Eli Lilly, huh? They giving you the Eli Lilly on a 7-week? Hold on. This is why I call it the Eli Lilly. Give me 1 second. Because Eli Lilly gave you the consolidation, manipulation. They said 3 insides, 1, 2, 3. And then if you look at XLP with the 1-1, if this could be, hold on, you gotta give us this is inside. It has to be inside. This is inside. Is it not? It gotta be inside. 4 month? Oh. And when's the new 4-month candle? So you working on a accumulation on the 4-month, manipulation, especially if they try to be tricky and you close within that. If you close within 79.29, accumulation, manipulation. You probably would distribute to the back to the upside. That's nice demand right there. So XOP, I like it. XOP, I like it. And you guys are probably going to see a lot of stocks within the. Okay, next XOK. XOK, you had a inside week. All right, inside week with the CCRP. Self-explanatory. Inside week with the CCRP. Let's see if we get that 212 to the target, which would be at 288.51. Okay, full time frame continuity to the upside. The 2-week chart not really working with you because you're still inside, but that could set up for a potential 212 reversal for the next 2-week candle. I believe the 3-day also has a CCRP. The 4-day also has a CCRP. Yeah, you got hammer 6-day. XOK looks good. XOK looks good. Let's see what happens. You do have a gap to the downside. And you have 1, 2, 3, 4, 5, 6 green days in a row. So me personally, I would like that 3-2 down on the day. Catch everyone off guard thinking you're gonna continue to go up. Really? Another green day? And then whoop, 3-2 down on the day, fill that imbalance real quick, then TTO back to the upside. That would be cool, get rid of this imbalances. But I do like that potential 212 reversal on the week to get to the target for XOK. XOP, all right, XOP, and I need to show you a blank chart for this one. XOP. We'll talk about this one later. Let me hide these drawings. How do you hide these drawings? Hide drawings. Okay. I think XOP's chart is crazy. I mean, I've been talking about oil. Where is it? Ah, come on. Is it the 10-week? Oh, you had a 311. 311. Give me a second. Oh, there it is. Okay, so you had a 312 on a 2-day, 313 day, 314 day. Ooh, there we go. 1131. There's no other time frames. There it is. 312 a week. Okay. 312 a week. All right. XOP. You guys know how I feel about oil. Whatever. It's gonna show the drawings. But anyway, so you're approaching this trend line. All right, and you have a 3-1 on the weekly time frame. Okay, this is around the time that oil started to go crazy. Actually, it was specifically December 21st. It was literally, I think it was literally on December 21st where oil decided to go crazy. But XOP could be setting up. I know we've been rejecting this trend line since last year, so it's gonna take some time. That's why it's not a matter of me looking at it right now, me looking at it for next week, me looking at it for next 2 weeks, going into next year. If you could potentially set up for a trend line break back to the upside. Now, if you look at this on the 10-week chart, I think, my drawings. Okay, really liking this sweep of liquidity right here. It's gonna take some time to develop, but you do have that potential flag break that you are approaching. Okay, you have this flag break that you are approaching that you could potentially set up for a breakout. You got a 312 up on a week. Maybe this could set up for a 312 up, 312 see you later to the upside. We'll see what happens, but I am watching XOP, and of course I'm gonna be watching XOP. I'm gonna be watching XLE. XLE, I don't know if are we back break even on this? I gotta check. But XLE, I'm still looking for continuation. Monthly time frame, quarterly time frame. Yeah, quarterly time frame. You have a potential 212 up on a quarter. And if they don't do it this quarter, let's say you don't do the move this quarter, right? You have a potential double inside quarter setting up for XLE going into the month of January. All right, we'll see what happens. Last time you had a double inside quarter, they triggered 2 up and you went to the target. So let's see what happens if you close as a double inside quarter for XLE. But I still love an XLE. All right. After XOP, RTH. You are at the hammer at the top of the trend line, so it could pull back a little bit. But you guys know the higher time frame just pointing up. Okay. RTH, they could, and I know it may seem hard to believe, but they could go for that 3-2 up on a month in force. Even though you're at all-time highs, they could go for it. So keep watching retail this entire month. I will not be surprised if all of a sudden we get some retail news that says like, oh, this has been the best holiday season, all of a sudden. And next thing you know, all these retail tickers just like go crazy. And then it causes RTH to do the 3-2 up in force on the monthly chart at all-time highs. You know what I'm saying? Yes, I know it's an outside bar at the highs. Yes, I understand. But the way retail has been performing though, I don't know if they're just doing it just to do that. I wonder to see if they're gonna get some continuation. All right, really loving the 3-2 up in the month. All right, okay. So now let me talk about a couple of tickers. We got like yesterday. Yeah, highest Black Friday sales. Yeah, that's what I heard too, and that's why like it kind of makes sense. Like it kind of does make sense. Okay. So Pepsi inside month. Also, you're with every single ticker on the watch list, or there's gonna be a thesis candle. Like, why am I looking at this trade? And then like the other time frames that surround that time frame. So Pepsi on the monthly chart, that's my thesis. 2-1-2 up on a month. 2-1-2 up on the month takes you to this target right here. Okay, to that 155.19. Objectively, strat target, you trigger 2-1-2 up in the month, you go to that 155.19. Now, I want to give a shout out to a couple of you guys in the chat, members, mentees, because you guys put Pepsi or other time frames on my radar, and some of you mentioned the 12-day. And I didn't even notice that the 12-day was coming off of a 3-1-1. This is beautiful. Now, with the 3-1-1 setup, you already know that they are telling you this is 24 days worth of consolidation, meaning we may need to stay in this play for a minimum 24. How many? What contract do I got? Do I got the Januaries? I might have to get some Februaries. I think I got the January 150s. Yeah, I might have to roll the Februaries. But you got, I might have to roll the Februaries. You 155s maybe. But we got to stay in the trade for a minimum 24 days if they trigger, right? Of course, the invalidation is going to be a 3-1-1-3 down if they trigger 2 up and then it turns into a 3 bar. That would be our invalidation. But if you trigger that 3-1-1-2 up on this 12-day, 24 days minimum for it to potentially get to that target. All right, coincides with the potential XLP, man. That's what I'm saying, y'all. I'm glad this is recorded. If XLP want to do what it want to do in January, we can come back looking at these charts. Like, remember when Pepsi gave us an double inside 12-day? And what does 24 days coincide with? Well, 24 days. We got the end of December, and then what if it discontinues wanting to break out into January? We'll see. But you got the 3-1-1-2 up on a 12-day chart potential. You got an immediate gap fill to 150.12, but of course I want to see if we can get to that high of 153.21 and then ultimately that 155.19. Okay, 2-week chart, inside 2-week right now, possibly setting up for a 2-2 reversal on the 2-week, and the 3-week is a double inside 3-week. Like Pepsi, you don't even gotta go crazy this week. Like Pepsi, actually, because you've been, 4 or 5 days green in a row, give us a red day, please. Like, please give us a red day. Don't go crazy now. Don't. I know you looking like you about to, but don't. You also got dividends coming up, so hopefully that could be the reason why we get a little pullback. But 3-week chart. We know the 3-week chart is going to be opening up next week. So in reality, you can stay inside 3-week. I don't know if they're going to do it because this looks way too good to be true. Knowing them, they might. But it's Pepsi. It could be true. But yeah, that's all I'm going to say. Yeah. Pepsi, fire. And there's like a lot of time frames that look good. You got CCRPs on multiple time frames. Like, yeah, looks good. Okay. Another one, MO. Another one in XLP. If we look at the monthly time frame, we got a potential 2-2 rev back to the upside, and we got a gap fill right above. Now, this is monthly displacement. understand that 2 months ago, you are coming from monthly displacement. So technically, these individuals or participants, they're the ones who are showing aggression currently, right? They're the most recent aggressors. So meaning that price can still, if we were to continue to go up, price can reject at 50% and come right back down. Price could reject at 618 and come right back down. But notice that the 50% lines up with the completion of the gap fill. So even if sellers are, the ones that are more aggressive or whatever, if they want to, they're like, oh yeah, we displaced and we're attempting a market structure shift to the downside. We got a candle close below this wick. Okay, well, if you're looking for a potential discount or premium to send it back down, all right, let's go long and take it into the gap. So on a 2-week chart, you have a potential 1-3 on the 2-week. This is anticipation. And you can see how we anticipate candles before they form right now. MO is telling you, you have a potential 1-3 on the 2-week chart. Why do you believe it can do a 1-3? Because we are only, how many cents away? Less than 9 cents. We are 9 cents away from triggering that outside 2-week. So if we can move up 9 cents, you would be a 1-3 on the 2-week chart, possibly setting up for a 1-3-2 up the next 2-week candle. Of course, it can do a 1-3-2 down. The 3 doesn't tell us which side objectively is going to get triggered, but based on other confluences, you can have a bias for one side over the other, and you can anticipate it potentially get an early entry. So I'm anticipating that this is going to be a 1-3-2 up on the 2-week chart that can match up with a 2-1-2 up on the 3-week chart. I love how you came into this demand right here. Wick, 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 wick. Look to the right. Wick, wick. Right? So I'm loving how you came into this demand and previous SR. Oh, they want to disrespect you. I love charts. Look at that. They want to disrespect you. Crazy. They said you didn't even look back enough. Look back. Okay, anyway, so 3-week chart, right? You got the wick, back to the upside. And if we, cigarettes, man, I don't know what they trying to do for December, but if they're doing that 1-3 on demand, this could take some time to play out. It could take some time to play out. But that's why we got some February contracts. We're looking for this potential gap fill to the upside. And the beauty of it, you got ER January 29th. So beautiful. So the February is ideal, because we can even get in for a potential run up. This is nice. MO's getting better. Oh man, shout out to y'all. This is a beautiful chart. 2-1-2 up on a 12-day. 2-1-2. Oh, no. You got a 9-day CCRP. It's about it. It's gonna trigger it. Yeah, it's gonna trigger it. Some charts just look. I'm telling you guys, there's gonna be like charts that look like way too good to be true. Like there's no way they're gonna allow this to stay double inside 9-day. Like there's no way. That's too easy. With the CCRP, nah. So they're probably gonna make this trigger 2 up to just be like, oh, liquidity super quick. Yeah. 3-1 5-day? When are you getting anyway? Okay, cool. I don't want this to go 2 up tomorrow, man. I feel like they are, but a 3-1. I think a 3-1-2 up would be better than a 3-2-2, but we'll see. But loving MO. Let's see. KDP, another one. Warcy, the video stream keeps failing to start. No, I'm streaming. Yeah, I'm streaming. It should be good. Is anybody else having any issues with the stream? Let me know. Monthly time frame. Video's not working for you either? Yeah, I need to have multiple screens. Don't worry, after this session, I'm gonna be putting multiple of my screens on. All right, so KDP, I sent the YouTube link in the chat. And I apologize, y'all. I'm sorry, I did not see the trading chat. I was looking at the live trading chat the entire time. Sorry about that. So KDP, you guys, I sent the link in the trading chat. So KDP 3-1-2 up on the month. You might just have to replay this video. I'm sorry about that, you guys. So KDP at 312 up on the month. That's my thesis. Potential 312 up, 312 see you later, potentially. You close as a hammer month at the high of the monthly chart. Already triggered, so it's already enforced at the current moment. And I'm looking for that 2866 gap to 2885, 2910 to 2923. Now, the target for the month is $30.01. So we would be on the way, or the gap fill is on the way to the target, which is why we're looking at that. The 2-month chart didn't trigger yet with any of the time frames. It's like CCRPs and stuff. Yeah, it's mostly just the monthly. Yeah, but really liking that 312 up on the monthly chart to target that $28.66. Okay. After KDP, Tesla, did you have a CCRP? Yeah, Tesla has a CCRP. And maybe previous month sweep. Okay, you have an outside month. I don't know what Tesla wants to do, right? But you have an outside month. This Tesla, it could also stay inside. But I like Tesla though. I like Tesla. CCRP to the upside, right? On the weekly time frame, if you already triggered it, if you can go in force, you have a gap fill at 442.49 to 455.23. I like it. I want to see what it wants to do. I don't like the fact that you have 1, 2, 3, 4, 5 green days in a row, but it's Tesla. Tesla can go 7 green days in a row if it wants to. It's Tesla. But if you trigger a 3-2 up on the daily time frame, I would want to target that gap fill at 442.49, and I'd like to think that they want to target that gap fill at 442.49. Okay. After you could get a pullback though. You could get a pullback for CCRP. But like I said with SPY QQQ, I'd like to think that every higher low is going to be a potential to go higher. Amazon is another CCRP on the weekly time frame, coincides with XLY. You could probably see if XLY and Y, like you could probably get it. If XLY is showing what it's doing, if XLY wants to trigger its 132 up on a monthly chart, who's probably going to be a participant for that? Probably Amazon and Tesla, the highest holdings within XLY. And the fact that they're giving CCRP potentials, that's why I'd like for us to continue to monitor these stocks. So they both triggered 2 up on the week. Let's see if we get continuation or that follow through, but really loving how XLY and the consumer discretionary sector is looking for the month of December. All right. And we would be targeting, I don't think you have a gap fill if I'm not mistaken. Yeah, you don't have a gap fill. So we'd have to be targeting those fair value gaps to the upside. All right. Let's see next. Low, already did the move. I guess I can talk about it. Why did we get into low? Because it had CCRP potential, right? You had CCRP potential at OTE. This is why we love CCRPs. 1, 2, 3, 4 red candles to the downside. Then you had your first green candle and you got the follow through last week, and they gave you a continuation move the second week, or third week, I should say, right? I always like to say, don't assume that the play is done just because like you need to get to target. You need a reversal candle that tells you that the play is done, or you're back to break even in terms of premium for your trade that you're in. But low was a phenomenal move. You also had, it was also in one of those ones where if you had triggered 2 up on the day, you were going to be triggering 2 up on the week and 2 up on the month. So potential trigger machine gun type of play. And hold on. Give me a second. Did we talk about this? So the low chart, like the entry for it, why did we get in particularly on this day? Hopefully you guys can see. Hopefully it's not too blurry for you guys to see. But if you look at this daily candle, you had a red candle close to the downside, followed by a green candle close to the upside. And we said, really like this low chart. You have 3 gaps to the downside, 2 gaps to the upside, but I like the CCRP on the week and XHP strength, right? Now, the reason why I'm bringing this up is because we talk about, or Vincent, he talks about entry models. And the reason why I personally believe that everyone should have their personal entry models, whatever the case is, 2 and 2 up, hammer on particular time frame. In this case, it was a bullish kicker pattern on the daily. if we go to low on the daily chart, and this is how you can put those put these clues together. What started the move? Like, and it's very important. It's very, very important. Let me show you. So, this is very important. The fact that this candle closed at the lows, no wick. There is absolutely no wick. And the next candle, this is bearish. This is like the most bearish. I mean, you have like an upper, but it's like one of the most bearish candle you could have. Like one of the most bearish candles you got. No wick. Aggressive bearishness, if that's a word. But then the next candle gaps up. And not only gaps up, you just go, you like have a little small wick to the downside and you go to the highs. Aggressiveness to the upside. This is like displacement on a lower time frame, like the 1 minute, 3 minute, 5 minute displacement countered by another displacement on a lower time frame. This is a bullish kicker pattern, right? All these individuals who went short the day before, oh low, you got a gap fill to the downside. We're gonna get the 2-2 red back down. Let's get some puts before the market closes. Rightfully so. But in the next day, you're drowned out of your position. You're down, no matter what. You open your eyes at 6:30 a.m. or 9:30 a.m. You're down 25%. You got weeklies. What was that, Monday? Yeah, you down 25% on some weeklies instantly at the open, right? And not only that, not only down, price is like, yeah, bye-bye, and it just goes straight up. So what you gonna do? You got some weeklies. You're gonna have to get out of your position. Adds to the strength of the bullish candle. Now, what confirms, this is why, this is an entry model. Hey, you have a potential bullish kicker pattern on the daily. What confirms a bullish kicker? 2-2 up on the day. All you need is a 2-2 up on the day. That confirms the bullish kicker. Right? And then we coincide that with your CCRP on the weekly chart. That's why I love these fractals. Everything like leads into one another. Everything leads into one another. You have the weekly, right? Oh, look at this stuff. Look at this. So they gave you a 2-2 rev on the daily chart, making you think like, oh no, don't worry. This is why I'm like, I tell people, like the time frame that the signal appears on, you gotta, it can take that time. So Monday, right? Monday, they're like, oh no, we're gonna feel a little bit of this imbalance, but you still have a weekly CCRP that could potentially trigger. This is why sometimes I anticipate, because if a higher time frame says, yo, we got CCRP potential, I'm gonna just get in the play and wait for you to trigger the CCRP. 50-50, I don't know, most times, sometimes, whatever you want to say, it will trigger the CCRP. The ones that it doesn't. But it depends if you want to be confirmation or you want to be anticipation, right? So they give you that red day, full time frame continuity to the downside. Oh yeah, higher, lower low, we're going back down. Just for Tuesday, trigger the CCRP on the weekly chart. 2 days, 2 out of 5 days, CCRP gets triggered, right? You get your bullish, and then you get to the target, and then you know what? If you look at the monthly, what is it making the monthly setup to do? You got a monthly hammer, right? At OTE, setting up for the first day of the month for you to do a 2-2 rev on the monthly chart. That's why we were able to get 100% on load this today. Because of because of the fractal time frames. And I think the 3-day chart also gave you a 4-day? Yeah, look at that strength candle on the 4-day time frame. Pretty significant. This one, you had strength right here, and you got the gap down. You got your move. That was the move. Boom, continuation play. Got down, buy. That's all we need. Then they went back up. Oh, it's just beautiful, these charts. But yeah, hopefully that you guys, that entry model of the bullish kicker pattern, bearish kicker pattern, that's why I really like them. I really, really, really like them. You could literally take trades just based off those entry models. Okay. After low, Okay, McDonald's. All right, so McDonald's. 2-2 reversal on the daily chart today. Did you get news or you got dividends? Yeah, you got dividends. So dividend payout today, you usually can get a gap down or you can get a move down because of the dividend payout. This move also triggered 2 down on the weekly chart. Now, it's not until McDonald's gets a candle close below the 3-week chart, which can happen this week because the 3-week candle is going to be closing this Friday. So it's not until you're getting a 3-week close until 50% of the 3-week chart where I should be worried. Now, you remember how I told you how I really wish they stayed inside last month? But you remember how, or last week, but what did they do? They triggered 2 up on the month like real quick. And you see what they did? They grabbed liquidity real quick and then they did a down move. I'm telling you guys, this stuff, it happens. Like, it happens a lot. Like, why did they grab liquidity last week Thursday or last week Friday, whatever day it was, for no random reason? Y'all know it had no reason to do that. It did it for the last 3 minutes, and all of a sudden you want to go trigger 2 up in a month. For what? Premiums didn't even move up, maybe a little bit. For what? Just to grab liquidity. And then it sets up for a move like this. Like it's when you see like how they do this stuff, and this is why the whole notion where I told you, I forgot what chart we were looking at on the 9-day, where I said, man, this looks too good. They're probably not gonna allow it to stay double inside 9-day. That's where I got that whole theory from. Because I'd look at these charts and be like, this is way too good for you to make it set up as an inside candle. It's too obvious. It's a 3-1-1-1-1. Everyone knows it's gonna be like, it's okay, the next candle's gonna go 2 up. So what do they do real quick? Trigger 2 up real quick. Right the last moment. Trigger 2 up real quick. And then liquidity sweep, and then you get a down move. When you see it, that's why I'm like, experience is the best teacher. Because when they do that, like quick liquidity sweep, like, why'd you do that? You didn't need to. You had no reason for the last, what was it, on Thursday or Friday to trigger 2 up in a month for no reason. It just wanted to, we're just gonna go up real quick. And then look, liquidity sweeping ever since it's been downside. You can't make this up. It's McDonald's. So something that you can anticipate for the future, this type of price action, it's like I expect it with McDonald's, and that's why that reassessment level is at 302.59. Watch for those liquidity sweeps. When they do something at the last second, and when I mean by last second, like the last fractals, right? So the last day of the week, the last week of the month, the last quarter of the month, when they do those things real quick, like, why? You have to ask the questions. You have to ask why. And this, it's gonna help you in the future, because you know you're gonna see it next time and you're gonna be able to anticipate it. Okay. So yeah. With McDonald's, you are setting up for potential continuation play to the downside, but like I said, Friday we'll see what happens. I'm still looking for a TGO back to the upside, so we'll see what happens with this one. Okay. Next is going to be, let's see, Disney. So Disney talked about this last week, and my projection for this trade, we're at the bottom of the Browning formation. Right? They're not going to give us this gap. This is way too easy. Like I'm telling you, this is way too easy. They're not going to give us that gap. So they're going to go up first. Now, how far they go up, we don't know, right? They could go up, reject at this gap fill, and now set up for the 100. They could go into the gap fill, go for 50%. They could go for the completion of the gap fill and be like, haha, you thought we were going for $100? Psych, gotcha. They can do whatever they want. But this is actually a great type of trade, me personally thinking, that you can play a hedge for, because you have gaps. This is actually it's Disney. I wish it wasn't like a slow mover with like a low ATR, how I do, but this is one of those trades where it's like, this is where I'm hedging, because I got a clear target. If you right now, and this will be your homework, if you mark or write out your confluences for Disney, I can bet, and I haven't even wrote it down, I could bet you may have either equal amount of confluences for the upside and downside, or may even have more confluences for the upside than the downside at the current moment. And this is why I hedge certain trades, because if a trade said to me, yo, we just triggered a 2-1-2, hold on, what did it trigger? 2-2 up? Oh, 2-2 reversal? Do you got inside bar anywhere? Come on, give me a good signal for the upside. Man, you don't even give me a good, hey, I'll get the inside. Okay, CCRP on a 3-day? Do you got a CCRP on a week? Okay, CCRP on the week, potential, right? CCRP on the week. It would have been cool if the target was here though, not here, because you could just go there and then reject. But anyway, if you have, I wish you had more confluence. It actually doesn't have a lot. I wish you had more confluence for the upside. But you can hedge this trade. Or you can hedge a trade that looks like this when you have an equal amount of confluence for the opposite side. And you know me, I love my gaps. So if a chart tells me, yo, we're going to this gap fill first. I know you want that gap down there, but we're going to this gap fill first. That's an internal liquidity. You can target that internal liquidity, right? So what, 110 calls, 112 calls, that would be something that I'll be looking at potentially for a TTO back, not TTO, for a remove up as a particular hedge, and then maybe get that flush back to the downside, and then I would get out of my calls and then add on to the puts for that, because I want that $100 gap, and if I have to roll for that, I will roll for that. And if that means you have to go up before you go down, you can go up before you go down. Let me just get some profits off the upside if you want to go up. So really liking Disney for both sides, potential hedge for my thesis, for my downside thesis. DE is interesting, because I wanted downside initially, but then I noticed that gap up there and I was like, if they want to make this higher low, they could go for that gap fill, right? Because look at this, structure is still got this, potentially, right? Higher low. So if they're trying to set up for some upside, maybe they want to target that upside gap. So I would watch this even for a potential 3-2 down on the day. Now, because I did say like my initial thesis was to the downside, why? Because you had a potential CCRP back down. That 3-2 down on the weekly chart, I was like, oh, that's a nice pivot machine gun. Maybe like a bear flag type of breakdown, you know? Like you got this. Got this. I was like, man, that'd be a nice bear flag to the downside with the 3-2 down on the week. Maybe. So I still go for either or for DE, because this could be either potential bear flag breakdown or a reversal back up into a gap fill to the upside. But you know, watch XLI and watch the VEGI, MOO ETFs in those industries. But I'm really liking DE as well. After DE, it's going to be Caterpillar. Actually, I'll talk about Cat. Because Cat could go both ways. Yeah. Cat could go both ways. You got a potential CCRP on a 2-week to the downside. You have a potential CCRP on the daily to the downside. You got a potential CCRP on the weekly to the upside. Actually, I would love to see how this plays out. So no bias for this one, because this would be a good case study to see how which CCRP, like, is it a situation where the higher time frame CCRP plays out? So the 2-week chart actually plays out and it doesn't trigger the weekly, or it triggers the weekly, but it ends up doing the 3-bar to the downside. I don't know. Does the daily play out because you got a potential CCRP on the day? Or does that lead to a potential TTO to potentially trigger the weekly CCRP back to the ups? I don't know. But I'd love to watch this to see how this plays out. Higher time frames say up, but this also could be the start of a little pullback because you are at all-time highs. But I'll watch Cat. Yeah, it really could go either way. And the month is coming off of an inside month. It could go either way. It's higher time frames say up, but it could go either way. Okay, so take us to the watch list. So like I said, I'm looking for just trying to finalize. I would love for us to get a little pullback. We've just had a parabolic move to the upside for all the indices. If they can give us a couple of red days, a little pullback before continuing to the upside, that's what I would love to see. My thesis won't change until we break 2 down on the week. Did we go 2 up on the week today? Yeah, we just grab liquidity. So if we break 2 down on the week for ES, NQ, DIA, then I'm like, oh, hey guys, maybe last week was a low volume pullback, or low volume rally, whatever they want to call it. We'll see. But until then, I'd like to think that dips can be bought. We have Jay Powell going to be speaking in about 30 minutes. We'll see if he does anything in terms of the future markets, or he influences the future market one way or the other. But yeah, that's how I'm going for this week. So intermediate pullback. Let's see if we can set up for higher for the rest of the December. Sectors, a lot of sectors showing CCRP potential. Let's see if they get that follow through this week. Still liking XLP, still liking oil, still liking retail, and of course the tickers that correspond to them.